So in this video, we are going to look at the first part of the process, or the first thing we need to know and understand how to build a picture around market structure. So in the previous video, we talked about direction. So we were looking at if it's an uptrend, it's making highs, higher lows, higher highs, higher lows, higher highs, and so on. Just put a few more in there. And for a downtrend, same thing applies. So it's making a lower low, lower high, lower low, lower high, and so on. So we want to know, why is this relevant in terms of how we're trading? Because there's a rule that I have within trading, and we're going to get into this in more detail, but the goal of a low is to create a new high. If that low fails to do its job, it's viewed as a weak low, and the probability is, and this is a probability and that's something you have to be very aware of, is that it's not a guarantee, but the probability is that that low will be ran. And by ran, I mean price will either break below that low or it will wick below that low and then continue on in an uptrend. So we need to be very aware of how we identify these different levels. So for example, in this case here, we have a high, and this high made a low, which then did its job and made a higher high. So when a low does its job, we take the high that was broken to then create the new high, which we call a BOS, a break of structure. So I would take my high here, I would drag it across to the area of where that price was broken structure. So that's a confirmation of continuation of uptrend. Then we know price is always going to pull back. So from a trade perspective, we could identify a level within this range here. So we know we have our range of a low up to a high. We could then try and identify a level that we might want to trade from to look for entries for then to find the continuation. And if our theory is correct and it creates a new break of structure, which it does here, then we've made our new leg, and then price then pulls back. And again, we're then trying to identify a level that we could trade from. We could then enter a long position from here. We know that this is a protected low because it did its job. And then we could say, well, let's run the high. So there's a 2.5 to 1 there trade on that one. And that's the really simple theory behind how we manage this process. There really isn't much more behind it than that, of identifying the trend. Is the market making higher highs and higher lows for an uptrend, and lower lows and lower highs for a downtrend, and then trying to find or identify the levels that the market might bounce from in order to get an entry to continue that trend in the direction that we're looking at. So when I spoke about it in the first video, we have a consolidation of a trend. We can see it's not making higher highs and higher lows. It's not doing anything of significance here. So if we're able to identify the three, it means it gives us the ability to stay out of nonsense that we shouldn't be trading, because it's not going to bear any fruit for what we're looking for. So again, if we go back to a chart now, let's go have a look and see actual real-time breaks of structure and so on. So I'm going to go for, we'll clean up this chart a little bit. We'll go for 1 hour and we'll look at the gold chart here. So this is a really nice example straight here from the chart. This level right here. So we had the market. Let's identify everything rather than me just pointing it out. So we'll start from here. We had a high that was broken. So on a 1 hour chart, that's a 1 hour break of structure for me. So if we can identify the low that created that break of structure, which is, I'll make this really simple, this low here. So this low was the lowest point that created this break of structure to the upside. Yeah. And then we had this high that was then created. Price pulled back and then continued higher. So we can see here price didn't come back and violate this low, so we knew it was protected. If we then take this high, drag it across, say that's another 1 hour break of structure. So the high was created. What's the lowest point that created this break of structure? Is this low right here. So we know, again, for the most part, this is protected. It did its job. It created a new high. So then again, we look to see where price is pulling back to. And again, we have a high just here, which is then broken. We have another 1 hour break of structure, and we then identify the low that created that. So in this entire leg, this low was not violated. Price moves up aggressively, and then we come up to this price here. So we see this high, then actually, there's a little one in here I just spotted, so this is a really nice example of how to be completely aware of what you're doing. So we have this leg here, created a high. This didn't really close strongly, so I still value this as my strong low. This continued up higher to create this high here, which was then a 1 hour break of structure. And then this low was then the strong low that we have here. So you can see this low did its job. It created a new high all the way up to here. This high failed to do its job. It didn't create a new low. So this is a weak high. So I could just draw this out here. And we can then see when it came down and made it low, this low here then failed to do its job. It failed to make a higher high. Price came all the way back up but did not violate that high there. So now we have a weak high and a weak low. Price comes down. If we mark out a low that failed to do its job, this weak high here, this then indicates a turn in direction. I'm just going to delete this just to clean it up a little bit so it's easier to see. This then gives us a clear indication of a change in direction. Okay, I'll go into this in more detail. So what we can see is then by identifying the breaks of structure as we go, we can identify the lows that created those breaks of structure within those legs to then manage them as a trade. So if for example I got long here, this low would be my strongest low within this entire leg up because I know it hasn't violated this low. It's making higher highs. It made a higher low to then continue on higher. So then I can move my stop loss up here. This does its job, comes down, makes a higher low, and then continues higher for a break of structure. My stop will go below here. Same thing again, it makes a high, fails to make a lower low, and then continues. My stop will go below here. So, for example, in this leg just here, say I was really clever and I identified a long entry here on this, and the market came up, and let's just say, I don't know where am I trying to identify my take profit as, but we'll just say we'll take the high here. And again, this is just obviously in hindsight, but the same rules apply. It's just as an example. The market moves up. I would then, once it breaks this high here, once this low goes here, I'm at break even. I am not going to lose a penny on this trade. Then what would happen is, as market moves up, like I said, makes a new high. So I'm at break even here, comes down, makes a new low, and then violates that high. Now my stop loss would move to this level here because it's done its job. It's continued on. Same thing, price moves up, comes down here. My stop moves up to this level. And you can see it continues higher. This low then comes down and then fails to make a higher high. If something fails to make a higher high, that is alarm bells for me. I'm going, this is weak and it's probably going to be ran. But I'm going to go into that in more detail as we continue on in these videos. So to run through again, just to give you examples, we have a downtrend here. So let's break this down and just see what was happening throughout this entire leg. And this again, just to help you identify the different sections that you're looking at. So say we just forget about what happened here previously, just to keep it simple. We have a high that made a low. And let's just say that low was violated. The market started a downtrend. We have a low, it made a lower high, and then a lower low. So this was a break of structure to the downside. Price came down, made a low, failed to make a higher high, made a lower low. What I don't really like about this, and again, it's valid. If I was short here, I would have been out of it anyways because it's part of the rules. We can see here it made a low, failed to make a higher high, which was here. So if I was short here on violation of this high, I would be out because this was a break of structure again to the downside. And this is what happens. I can't control the trend. I'm just going to follow it as I do, and manage the rules, but then you can see it maybe took out some people here and then started a continuation on down to the downside, and that's absolutely fine. We can see here this low made a new high. This high failed to make a lower low, so this is what I would consider an entire consolidation range here, because it's not breaking the lows or the highs within these levels. So you can see there's a high here and a low here. Everything within this is consolidation. I don't know which direction now it's going to go. It could start going back up or it start going back down, which in this case it does. So we can see here at the end, once we get a break of the low, we have, say we take this as our break. Price pulls back up. What is the high that did its job? So we had a low that made a high. So here's our break of structure just here. And that gave us a clear indication that the market is continuing in a downtrend at this stage. So what would happen here is I would identify this, that it did its job. It continued lower. And that would be my strong high that did its task within there. So as I view this a little bit more, we can then see, I'm just going to remove these just to keep it simple. We have a low that's violated. That's a 1 hour, let's see, 1 hour break of structure. Comes down, makes a low. This is our protected high. Makes a lower low. Break of structure here. So 1 hour break of structure there. What is the high that made that low? This low here, comes down, makes an entire leg. This low fails to make a higher high, but then this high fails to make a lower low, which is then, like I said, an indication that the market is going to change direction on me. It's an indication, it's not a guarantee, but you can see market price has come up and has taken out this high here. It's closed, but it's not extremely strong. Like if I go up to a higher time frame, it's closed there as well. So okay, yeah, this is probably indicating then that there's a change of direction within this area. It's come down, it's probably hit a resistance level just here, and again I'm getting a bit more ahead of myself than I want to right now, but just to give you an example of what's happening, it's come to a resistance level which is a previous high, and now it's decided to bounce. It's pulled back. It hasn't violated, or has it violated that low? Probably wicked it. Let's see. Has it violated that low that created the higher high? So now we know this is our protected low, and the probability is price is going to continue higher from this stage. So what we could do is monitor it to see, does it break this high and continue on in an uptrend? So something like this, as it continues higher and so on, to take out the highs that it previously has up here. So again, really simple process. You need to be able to pick a time frame and identify the highs and lows that are created within that time frame and that trend structure. Once you can identify them and pick them out and identify the exact specific areas that created the new lows and so on, it's going to give you a really nice framework in terms of how to manage your trades as you go through the stock market.